Welcome back to another episode of the TBE podcast. I'm your host, Ollie Forsyth, founder of TBE, the global community of 35,000 budding entrepreneurs. Today, I'm joined by Ben Tompkins, managing partner at Draper Esprit, the VC fund. Just before we dive into the interview, just as a reminder, if you are looking to start, grow, or fundraise for your business and would like some support, we would love to see how we can personally help you. Please visit www.tbeclub.com where you can send us an email. We would love to see what we can do to support you. Now, let's dive into the interview. So welcome to the TBE podcast. Today I've got Ben Tompkins from Draper Esprit, the VC fund. How are you going today?
Yeah, good, thank you.
Good, very nice. What did you have for breakfast this morning?
You know, I actually skipped breakfast this morning.
Fair enough.
Dare I say. I ran here and I skipped breakfast. And I think I had my first cup of coffee at 10 o'clock.
Yeah.
And that was breakfast.
Here and there?
Yeah, pretty much.
Fair enough. It's a good way to go, I guess. What is your favourite company right now, apart from the fund, obviously?
Well, my favourite company right now is the deal I just recently did, which is Aircall, which is a company in Paris. We just led the B round.
Nice.
And, you know, they're really going great guns right now. Got a great growth rate, building out in New York as well as Paris.
Fantastic.
And just seem to have really found a niche and executing against that. So,
Fantastic.
very exciting.
We'll come on to that later on.
Great.
And what is the one thing you would have done differently before you turned 20?
Oh my gosh, that's a good question. Before 20,
It wasn't very long ago.
it was an awful long time ago. I think today's under 20-year-olds, and I have a 16-year-old daughter, right? She's very focused on the vocation she wants. She, at age 16, she knows what she wants to do. When I was 16, frankly, when I was 20, I had no idea whatsoever. And so at age 16, she wants to be in the movie, film production business. She's already immersed in that business at the age of 16. So what I would have done differently, I would have been a bit more focused vocationally on what I really wanted to do, as opposed to making that decision sometime in my mid-20s instead.
And did you go to university or?
Yeah. So I went to college. I did a law degree. I then became a barrister. And I practiced law for about a year, and then decided it was a little too dry for me. So that's when I went into technology investment banking. I started doing M&A deals in the internet bubble in the early 90s.
Fair enough. So if you could just summarise, I guess, your career. I mean, you've kind of just said it, but if you could summarise your career to date in 2 minutes, what would it be?
Well, it's been in 2 words, in 2 minutes.
2 minutes.
2 minutes, great.
2 minutes.
It's been a combination. So I started my career as an investment banker, which was a great ride. I was a banker for about 13, 14 years through the bubble, the up and the down of the bubble. Saw lots of great companies raise lots of money and have some big exits. Met lots of great entrepreneurs, but effectively was an advisor, working on 4 or 5 deals every year. So I did that for about 13 years. The company I was involved with, Broadview, we sold that to Jefferies. I was a banker at Jefferies for 2 years and decided that you can only do so much investment banking in a lifetime, and it was time to go and do something different. So I joined some of my ex-colleagues, ex-clients, and we raised an early stage fund doing very early stage technology investing. And so that's what I've been doing for the last 12 years as a tech investor. The fund was originally Eden Ventures. We raised 2 funds. We did seed and A-round investing. I'm still a partner there, but I joined Draper Esprit just over a year ago now.
Fantastic. So tell us more about Draper. What does it do, and what kind of entrepreneurs do you back?
So we're a Series A and Series B focused fund based in London, but investing across Europe. So we are doing probably 12 deals a year right now. We're deploying about 120 million euros in new deals a year. So that's quite a big capital commit that we've got. We're a technology investor. Within technology, we do everything from semiconductors, infrastructure, software, enterprise, right through to consumer. So we're pretty broad, but we want to see a big component of technology in the deals that we do. And we're looking for entrepreneurs that have got international ambition, global ambition. I think one of the exciting things about Europe right now is that finally we're at a stage where we're funding our businesses for global success. We've got some great IPOs like Spotify. We've got some great exits to talk about now. But entrepreneurs need capital behind them to be able to build great businesses, and so that's what we're looking for.
And what makes you guys different from other VCs out there?
Well, actually, one thing makes us very different is that we're actually a publicly quoted company. So we took the company public about 2 years ago. Was a brave move at the time, but it's really paid off for us. And that gives us two really interesting advantages. The first is we have a long-term view. So most venture capital funds have a fixed life. They're 5 year plus 5 year, which means 5 year investment period, 5 year effectively harvest period. But these funds are sort of, they're 10-year funds. They get extended, but they're basically 10-year funds. It takes a long time to build great companies. And as being public, we're effectively we have no time frame. We're effectively our time frame is basically at the return that we make on the money that we invest. So that's the first advantage. The second advantage is that we're an evergreen structure. We deploy money off our balance sheet, and as we have exits, that money comes back onto the balance sheet and we can redeploy it. So it gives us a lot of leverage and a long-term view.
And how do you raise new funds? Is that through private investors? Funds?
No, it's mostly we go to the public markets and raise more money. So we just did a fundraise back in June, where we raised another £150 million in June. That was the second fundraise we'd done in 13 months. And we've got a solid group of investors behind us, some very big fund of funds, some well-known investors, but also we're a public company, so you can buy our shares on the stock market.
And is that an advantage or disadvantage?
Look, I think it's an advantage because it's given us access to great capital and a long-term view, and actually flexibility as well. So you may have noticed we also, as well as doing primary Series A and Series B investing, we also do fund-of-fund investing. So we've invested in 12 seed funds in the last 12 months. These are companies like Stride, IQ Capital, Icebreaker, Join in Germany. We've just done 2 in Spain. We've just done 5 seasons in France. That's 12 seed funds who give us deal flow that we look to at the A and the B round. We also have the flexibility to deploy the money at a later stage, so where we can look at buying whole fund interests. And you may have seen we acquired Seed Camp 1 and Seed Camp 2 last year. That gave us a big position in Transferwise. And we've recently announced a merger with Earlybird in Germany, where we've committed 70 million euros to their latest fund. So all of that you can't do with a typical GP-LP structure. So the strategy we've got, we think, is quite differentiated.
Interesting. And why invest in seed funds?
To give us deal flow and insight. So these guys are either geographically focused. So Icebreaker, for example, is in the Nordics. We've just done CIA in Spain. So they give us great geographical coverage for deal flow. 5 Seasons is an agri-tech fund run by Ivan Farnetti, who's ex-Doughty Hansen guy. So they focus on technology selling into agriculture. So they're based in Paris. We also just did the Hardware Club, another fund based out of Paris. Again, they focus on hardware deals. So what these funds give us is really great deal flow, but also insight at the early stage. So effectively, hopefully, when these deals come through to Series A and Series B, we get to see them first. Yeah.
Interesting. And what companies do you really look for, and what would you really look at entrepreneurs?
I look for people who've just got tenacity and strength of vision. I mean, I think these are all often said things, right? But I think being an entrepreneur is really difficult. It takes time and effort. I look for people who have got a vision, who are tenacious to execute against that vision, but also are soul-searching enough to know when to pivot and change. Your first plan is not normally the plan that you're left with in 2 or 3 years' time, right? So being an entrepreneur is all about figuring out when to make a change to your model and how you iterate as you build the business, right? The next thing I look for is people who are just great people, can they lead? Can they build a great team around them? Can they attract the best talent in the market? I mean, right now the market is so hot in tech, it's expensive to hire people. You've got to be a great leader to basically get the best talent to come and work with you. And
what's some of your favorite companies in your portfolio right now?
So I'm about to speak to Eric in a few minutes, who's the CEO of Ledger. So we led a $75 million B round in Ledger earlier this year. This is basically crypto security. It's a huge vision. So it's basically providing a security standard that's hardware, but also then software for cryptocurrency trading. So, I mean, that's a long-term view for us. Obviously, the Bitcoin and the crypto markets have gone up and gone down, but we fundamentally believe that blockchain is here to stay and going to be transformational. So Ledger would have to be right there, up there on my list. We also did a small deal. We were part of a B round to ICEYE in Helsinki in May. This is a business that's basically producing microsatellites for near-Earth orbit. The idea of putting a network of small 80-kilo satellites around the world, which will give you huge amounts of data we just don't have today, that can be used in all sorts of analysis for either agriculture, for energy, for financial services.
And there's lots of uncertainty in the crypto and blockchain world. Can you give us some thoughts and a perspective of where you think it actually is going?
I think it's early days yet. I honestly do. I think if you look at how long it took the internet to come about, the internet really started in the early 1990s, and then it crashed in 2000, 10 years later, and then frankly we started to see Google and Facebook emerge in 2002, 2003, 12 years, right? I think blockchain is similar and crypto is similar. I think these things take longer than you think to be transformational, but normally they're just much more impactful than you ever believe they will be. So I think what we're seeing in blockchain is some interesting early stage businesses emerge. I don't think we're seeing really later stage businesses yet in applications. But in terms of the infrastructure, I was looking at the Bitfury announcement last week where they announced that they're looking to go public in Europe at a $3 billion valuation. And I've spent some time with the Bitfury management team over the last 6-9 months, and they're pushing out some impressive numbers right now. And so their investment is happening into blockchain and crypto infrastructure, and I do think that will have a downstream benefit.
And when entrepreneurs come and pitch you, do they always have ridiculous valuations?
Look,
how do you value a company?
You got to go back to basics, I think. We're if you wouldn't be in the early stage or VC investing business if you didn't believe. So we're just we're always opportunists, and we're looking for. We're looking for big outcomes, right? So, and big outcomes need significant capital and therefore tend to have high price tags attached to them, right? But ultimately, you're just looking for, how big's the market that can be disrupted? What's the size of the prize? And, the size of the prize, the bigger the prize, the more capital it's probably going to take to actually get to that prize. And there's going to be a risk involved in that. So, you could look at the valuations today and say that they're high, but you could also look at some of the companies that have been built over the last year or two that have absolutely transformed the industries they're in. You think about Revolut in financial services. Think about N26 in financial services. Think about Spotify and music. I mean, these companies have massive. Think about Uber. They've massively impacted traditional businesses, and so. How do you put a price on that? I mean, they are valuable businesses. You can't get away from that.
And what's the one company you wish you backed?
Oh, crumbs. Well, Spotify. I had the opportunity to invest at the B round in Spotify, and
really?
Foolish me, I thought it was too expensive, to your point.
Fair enough. And you met Daniel?
Yeah, absolutely. This was, several years ago it was the B round. I think he was raising money at $30 or $40 million pre, and we just thought it was a bit expensive. Yeah, ridiculous. Look, I think if you've been in this business for a long time, you've all got stories like that, of the ones that got away. That's just the nature of the beast, right?
Fair enough. And what do you see the most common mistakes entrepreneurs make?
I think that they tend to... two things really. The first is not have a really good grasp of what their market is. And so we tend to see huge numbers. My addressable market is 10, 15, 20 billion, whatever the number is. But the reality is at any point in time, you need to be successful, you've got to focus. So you're better off starting with a focus on a tight market, maybe a small market, which you can really get traction in, and then have the opportunity to build the market opportunity later. And so I think not understanding your market focus enough is one thing. The second is, I think entrepreneurs are naturally always saying that, look, I need to raise this amount of money now because the market is happening around me. And if I don't move now, I'm going to lose the competitive advantage. I think that's rarely true. I think that it takes time to build companies. And one of the tricks of the entrepreneur has got to be to figure out the market timing. You look at mobile games, for example. When I was an investment banker, did a lot of work in mobile games in 2002, 2003, and 2004. There must have, billions of pounds went into developing mobile games in those years. And guess what? It was all for nothing. And it wasn't until the iPhone came out in 2007 that you started to see Supercell and King and Angry Birds, and all of a sudden mobile gaming is big. But frankly, before you had the hardware, there was no business. And so getting the timing right is really critical.
And do you think London is the best startup scene?
Well, I'm a Londoner, right? So it's going to be a slightly biased answer. I think London has got a huge amount going for it, right? Post Lehman, it was a really difficult place. But what happened post the Lehman crisis in 2008 was that we went from 3 accelerators to about 120 now in London City. That's amazing. I think there was £100 million of capital invested in tech in 2010. In London, last year it was like 3.5 billion. There is a depth of the market in London that you don't see anywhere else in Europe today, right? Obviously, the Silicon Valley is much deeper, but London is probably the deepest ecosystem in Europe. I think Paris is looking exciting. We're about to announce our 3rd deal in Paris this year, so we obviously believe Paris is happening. And Berlin, we're seeing a huge amount happening in Berlin as well. But those ecosystems are still quite early, I'd say, and they're not as deep as London. So I think London has got a lot going for it. Yes, I'm concerned about Brexit and where that leaves us, but ultimately I think we've built an ecosystem that's going to take time for another capital city to replicate.
Interesting. Well, we just interviewed Stephen Cable a couple hours ago. What do you think is going to happen with Brexit? Do you think it's going to happen? Oh my God! Look,
I suspect what's going to happen is we're going to spend the next 3 or 4 months just going around in circles in what is a sort of a media circus of Brexit this, Brexit that. I honestly believe that roll forward 2-3 years' time, the dust will have settled, and frankly, we'll have all moved on and hopefully done better things with our lives. I just don't think. I think the biggest issue we have right now is the uncertainty, and I think that is a big issue. But I think roll forward 2 or 3 years, once the dust has settled and it's done, I'm not sure it's going to have that much of an impact.
Will it affect you guys? Or?
I think it affects us at the moment. I did have a deal a couple of weeks ago, which was unusual because it was a 20 million euro raise, seed round raise. So it was a very big seed round where they were deciding where to put the domicile of the company. And the decision was between London and Amsterdam. And like 3 years ago, it would have obviously been London, but they chose Amsterdam. So that's an example of somebody deciding to put their company domicile and their HQ in a different city than London. So that is obviously a big example of how it's hitting our business. But we're investing across Europe. We've got a relationship with Early Bird in Germany. Part of that is a little bit of a hedge against the UK. We think France and Germany and the Nordics are exciting places to invest right now. So we're spending time there as well.
And are you guys only based in the UK, domicile-wise? Or?
We are based in the UK, but we spend a lot of time travelling. I mean, I think for me, the building the team at Draper Esprit is about having everyone together in the same place. So we're trying to build a culture and a team of people as well who work as a team. So we have everyone in London. We have a small office in Dublin as well. But then we do a lot of travelling. So I spend probably, I'm in Paris probably 2 or 3 times a month. I'm in Berlin 2 or 3 times a month as well. A lot of travelling, yeah.
And talking about team and culture, how big is your team now?
So we are 25 people in total, of which of that 15 are investors. So 15 people who are out there looking for investments, making investment decisions.
And how do you build that company culture?
Well, I think it's for me, being a good venture capitalist is all about it's combining 2 things. It's combining experience and network, which you get as you get older, with ambition and passion and belief, which you have when you're younger. And so I think one of the things you have to fight against when you're a venture capitalist is it's very easy to say, I saw that 5 years ago and it didn't work then, so it won't work now. And so as I think about building the team and the culture at Draper Esprit, I'm looking for a combination of experience and network, plus youth and ambition and enthusiasm and belief. And I think that helps you makes the best investment decisions.
And who's the youngest founder you backed?
The youngest founder I've backed personally was Charlie Muirhead, who was 22 years of age and we invested in Orchestream. This was a fund called Kennet, which I was a partner in when I was a partner at Broadview, and we did his A round, I think, and he was 22 years of age, and he went on and took that company public on the London stock market and then sold it, and he's now obviously running an event in this business.
Interesting. And the youngest entrepreneur in Draper?
The youngest entrepreneur in Draper, that's a good question, and I don't know the answer. I suspect it's the founder of Verve, whose name escapes me, but I did meet a couple of months ago, and he must be in his mid-20s. And so, I think we finding great talent is kind of slightly ageist, I'd say.
And just before we finish, what industries are you guys really focusing on right now?
So we've been very active in healthcare tech and fintech this year. We think those are two really big industries that are being massively disrupted in lots of different ways. So we've actually been deploying money there. AI continues to be very interesting, but I think it's still somewhat early, frankly. And blockchain, I think, really interesting to us as well. I just think these are trends that are going to be very disruptive. They tend to take time to happen, but I do believe that roll forward 10 years and we'll see some really big companies being built out of those trends.
Fantastic. And to finish off, what advice would you give to an entrepreneur?
Keep going. I think being an entrepreneur it's really hard. You've got to kiss a lot of frogs to find the prince. Fundraising is tricky, but you've got to have tenacity. You've got to have vision, and figure out how to get great people around you. But keep going. I mean, this is a great time to be building a tech company in Europe. Enjoy, basically.
Awesome. Well, Ben, thanks so much for your time.
Pleasure.
And good luck with it.
Thank you.
Thank you. So, another fantastic guest on today's TBE podcast. If you want to hear more from us, please don't forget to hit that subscribe button. You will never miss a future episode. In the meantime, if you are looking to fundraise, start or grow your own business, don't forget to get in touch with us. Just visit tbeclub.com. And just to finish, a huge thank you to Noah Conference, who very kindly allowed us to interview some amazing entrepreneurs. We hope to see you next year. Thank you very much, as always, and good luck.